Hey you guys, my name is Jeff. Welcome to the channel. If you've been here before, fantastic. Take a seat and stay a while. If you haven't, take a seat and stay a while. Because today I am going to show you the magic box. My guess is you've never heard of this investing idea, but it's super powerful and it's useful. I promise you that if you have never heard of this before, by the time you get to the end of this video, you're gonna understand an investing concept that is useful and powerful and will help you to invest during really difficult times, stormy times like we're in today, without fear, knowing that patience is on your side. The concept of the magic box can be represented by this very cool little blue box I've got here. Now this box represents a doubling times 2 of whatever you put in this box. So you may say, well, what does that mean? What are you talking about there, Jeff? And I would say this. There's a rule called the rule of 72. And that just says for whenever you're going to invest money, if you take the number 72 and divide it by the interest rate that you can reasonably expect to get for your investment, you will get a number, and that's how long it will take you to double your money. If you start with 72 and you believe you can get a 10% return on your investment, 72 divided by 10 means in about 7.2 years you will double your investment. And if you think, well, I can get 7% return, for example, then that will mean 72 divided by 7 means you might have to wait about 10 years. But regardless of the time frame, you are doubling your money. So what does that look like? Now here is the magic box, okay? And I'm gonna open this and you will see how this works. Now, if I told you that for every, say, dollar that you took and put into this magic box, you could then pull out $2, how much money would you put in this box? You could take 10 bucks, drop it into this box, and pull out a 20. How much money would you put in that box? If I told you you could take 100 bucks and drop it in here, and you could just reach in and pull out 2, how many would you put in that box? Well, I think this determines your success as an investor. You see, a lot of people don't think long term. They think about what's going on in the market today. The fact is that if you were to invest and get a 10% annual return on your money over time, then that would mean it would take 7 years to double your money. And if you got a lower return, say you got 7% a year, it would take 10 years to double your money. But the fact remains that the power of compound interest means that over a time frame from between 7 and 10 years, it's reasonable to expect, based on how the stock market has done in the past, that your money can double. And I think it's, especially relevant today, where people are literally reading the news and watching videos and trying to make decisions on a day-to-day, week-to-week, month-to-month, trying to guess where the economy is going, guess where interest rates are going, and predict the movements of the stock market, all of which are impossible to do. Yet we focus on things that are beyond our control, and we worry that this might happen or that might happen. And when this reality, when this day-to-day thinking overwhelms, I just bring myself back to this box. And I just remember that every dollar I put in doubles. Every $100 doubles over time. And if I take $1,000 and I'm willing to open this box up and put it in, when I come back 7 to 10 years, it's $2,000. So, keep this in mind. And I think this is a long-term strategy. If you're saving to make a purchase, if you want to buy a car, if you're planning on buying a house in the future, if you're planning on putting your kids through college, whatever it is, you can use this power of compound interest. You just have to start early and think long term. And when you think about this, I really do believe when you can think about taking $1,000 and putting it in a box and turning it into $2,000, that instantly changes your desire to invest. It instantly, for me, makes it a really easy decision because I want to start saving money. I want to start saying, you know, that thing I was going to buy on Amazon for $28 that I didn't really need, that $28 could be $56 if I'm able to just put it into the stock market and wait. So every time you're thinking of spending $75 on something that you're probably not even going to know what you spent it on, well, that $75 is $150 if you can just wait. And when you think of all these things we buy in the course of the month, many of which we don't really need, but you know, you buy some clothing, you think, oh, I really should have this fancy this or that because so-and-so will be impressed or whatever. Ignore all the frills, all the fancy stuff, all the decorations and accessories that you don't really need and that you're never gonna remember, and you're just gonna wind up donating or throwing away or recycling because you didn't need it in the first place. And so if you can just think of all of these expenditures and figure out, hey, do I really need all of them? Because if you can just save like $200 or $300, well, that turns into $400 or $600. So anyways, hopefully this mindset, this way of thinking will really help you to get out of the day-to-day concerns and worries about where the market's going and what's happening in the news, and keep focused on the long term, because it's truly in the 10-year, 15-year, 20-year and beyond periods that the stock market has always historically proven to grow investors' money over time. I'm so glad you stopped by and that we could share some time here together. If you liked this video, please give it a thumbs up. And if you haven't already subscribed, then please hit the subscribe button and also the notification bell, and that way you will get a heads up the next time I make a video. Thanks so much for watching, and I look forward to seeing you in the next video. I'm gonna back up here. I'm gonna back up just a little while because the beginning was good.